This fund invests in businesses we call economic franchises. So think about really good businesses, but they have something special about them that will enable them to be much more predictable than the average company. So they'll be natural monopolies, they'll have brands, they'll have barriers to entry, a moat around their businesses that will make them, we think, genuinely better businesses, more financially productive. The investment process is very disciplined. First, we need to focus on selecting those franchise businesses, those forecastable businesses. It brings down 2,000 businesses into a high integrity universe of 330 companies globally only. So a very selective club. But then the next one is about valuation. Valuation is crucial for the success of the investment. Overpaying is a risk factor that we think people usually underestimate. And therefore, fundamental analysis help us set target prices. And those target prices will be compared to the share price. So what we want is very significant upside. And as the upside reduces, we'll have less and less exposure to companies. And when companies become expensive, we'll simply have to wait for them to become inexpensive. Risk is important to take into account. You can look at it several ways. The key risk from our portfolio is that it is very different from indices. And we think it is at times the right thing to do because we have so much emphasis on valuation that when markets become expensive or exuberant, i.e. 2024, will be very, very different. And that's probably okay. If you look at the behavior of the portfolio over the years, there has been a clear emphasis on capital preservation. And we think by accepting to be different from the market, we'll bring something to our investors. Concentration risk. It is a high conviction portfolio. We'll have between 25 and 50 names. As a result, individual security selection is a key source of risk. ESG is important in our analysis. So to assess our investable universe, we have 9 criteria. One of those is ESG. And it's important that we approach it in a very pragmatic and non-dogmatic basis. We want to put numbers in terms of the risk and opportunities from ESG factors. When it comes to environmental features, does it prevent us from including a company from the universe or not? Think about natural disaster risk. From a social standpoint, the main reason we've never invested in tobacco businesses is that we think that the societal implication of smoking make those companies genuinely very difficult to forecast in the long run. And from a governance standpoint, businesses can misallocate capital. This is a huge source of risk. So understanding the strengths of the governance of a business, opportunities and risk arising from it is crucial. The fund is a very good addition to Clan's portfolio. Why? It's because it is different, it behaves differently, and therefore brings a substantial level of diversification. That's point number one. The second point is its emphasis on capital preservation is crucial and very helpful. Now, we've had over the years an upside capture that is just over 100%. So it does participate in rising markets, but clearly lags in the most exuberant market. However, when things become more challenging, that's when the emphasis on valuation becomes extremely precious.